Hello and welcome. This is Stocks to Watch on BloombergQuint. I am Agam Vakil. This is where we take you through three stocks which are in the news and address them with our experts. Well, today we have with us Avinash Gorakshakar. He is the Director of Research at Profitmart Securities. And before I get in with Avinash in the conversation, let's also talk about the three stocks that I want to address in today's day of trade. And we have HDFC Bank, Marico, as well as Metropolis Healthcare, where we have seen an activity come through. But I'm going to start off with HDFC Bank right at the top, and we have the first quarter update from the bank, and it suggests that advances are up as much as 21%, deposits are up 25%, and CASA ratio standing at around 40%, which is not very different from the year on year, or for that matter, sequentially, around 40%. We've had a handful of broking notes, which have also seen and are suggesting that these numbers are encouraging at this point in time. But let's get in our expert in the conversation. Avinash, good morning and thanks for joining in. Let's start by taking your view on HDFC Bank at this point in time. Where does this stand in the spectrum of investment?
Good morning, Agam. I think numbers which have come out from HDFC Bank definitely look quite reassuring, in this challenging period. And I think advances growth as well as deposit growth numbers which have come out for the first quarter are definitely numbers, Agam, which would be definitely be positively welcomed by the markets. I think the markets would definitely also look at the fact that what has been the stress on the unsecured book, which has been a kind of a pain point for HDFC Bank. But I think overall the numbers appear to be quite strong. And I think these numbers clearly indicate that there has been some uptick in the economy. Hopefully, after the first quarter, what could be the management commentary and the kind of outlook by the bank management would be crucial to hear out. But overall, I think these numbers, Agam, are definitely positive, and I think give a lot of comfort to the fact that in these challenging time we have seen growth metrics actually improving on the positive side.
Private sector. Well, from there on, we move on to the next one, and that's Marico. Again, a first quarter update, but here things are not as encouraging, but perhaps also on expected lines because the company has suggested that they're expecting volumes to decline in low teens, and they're expecting a bounce back a little later on in the year. Of course, a lot of this, I'm sure, has already been factored in, considering we know how the lockdown has extended and and we have an idea about the kind of impact that it may have had on volumes for some of these large companies, especially ones which are in personal care, because personal care is not the segment which has significantly picked up. Avinash, your view here, in the release, it was also suggested that the foods business did relatively well, but not so much for when it comes to the hair oil business. Your view on Marico from here on?
No, I think Agam, the management commentary which has been mentioned that the hair business is unlikely to show a reasonably good uptick, at least in the very near term. I think clearly indicates that there has been some pressure on volumes, and I think this is a very important business for Marico, considering that a large part of their top line and profitability comes from this piece. The food business, I think, will take some time to scale up and actually show in a profitability number. So I think with these kind of numbers, I would not be surprised that the stock could open a little softer today. And I think whatever improvement could come in this stock would obviously be in the second half of FY21. As I mentioned, the FMCG basket is definitely going to grow, but you could possibly see a better set of numbers for the second half. Markets could definitely not be very excited on these numbers, and at best, it could be a market performer. But definitely, I think volume uptick is going to be a very important barometer. And for the near term, I think the stock could remain sideways to a little weak, in the very near term.
Well, that's your view in Marico, and we move on to the final one, and that's Metropolis Healthcare. Now, of course, we're taking this up because there was a bulk deal where CA Lotus Investments sold about 1.2% stake, but on the other hand, we have two large mutual funds, ICICI Prudential Mutual Fund and Aditya Birla Sun Life, which bought into Metropolis Healthcare. Avinash, much has been spoken about some of these diagnostic companies. Where do you stand when it comes to Metropolis Healthcare at this point?
No, Agam, I think this bulk deal is definitely a very large one and a very interesting one, and the markets could obviously, look at this very closely. But I think, from a very near term to a longer term perspective, this is a business which is bound to grow, considering the fact that lifestyle diseases are now increasing significantly, and Metropolis is increasingly now focusing on its B2C model. Looking at the kind of growth opportunity and the company's positioning, I would not be surprised that this news may not have any negative impact, at least in the near term. Longer term, I think the market should obviously look at stronger earnings numbers, because the first quarter is going to be a washout. April and May have been lockdown months, so possibly the stock may remain a little range bound in the very near term, as valuations are not very cheap. But longer term, I think over the next say 1 or 2 years, it definitely fits into a kind of a proper portfolio kind of positioning. And I think any decline should be used as a opportunity by investors. At the current level, I think it would be better to be a little cautious, because earnings growth may not catch up the kind of growth we have seen on the stock price. So I think net positive, but yes, in the near term, I think the stock could remain range bound.
Okay. And Avinash, any new ideas that you have at this point in time in markets?
In fact, Agam, from the rural space, we continue to be positive on M&M, Mahindra and Mahindra. Our sense is that, the company has a very large percentage of revenue coming in from the rural markets, especially the tractor market. And I think looking at the numbers of comparable competitors, our sense is that the first quarter of FY21 could be a little better for Mahindra vis-a-vis other automobile players. More importantly, on the leverage side, Mahindra is well positioned. The company has taken a loss in the fourth quarter by writing off their entire investment in Seong, their Korean subsidiary. And I think the markets are now happy that, clearly from a rural market perspective as well as from an earnings perspective, one could see a stronger recovery here. So I think even at the current odd levels, investors could definitely look at putting in a little amount of, funds on this stock. Over the next, say, 12 months, we could expect at least a 10 to 12% kind of upside here. So this could be a good pick in the given, market scenario.
Okay, fair enough. Avinash Gorakshakar, thank you so much for joining us and taking us through those
Thank you.
stocks this morning. Well, we'll be watching out for some of these names. And on that note, it's a wrap on the segment, but there's lots more lined up. Stay tuned to Bloomberg.